Hello, everyone, and welcome back to the weekly market technical outlook. Uh, as of Friday, July 3rd, 2026 close. I'm your host, Dr. BJ Love, and I'll be bringing you this week's update here at the Money Flow Market Newsletter. We use time-tested methods and indicators that helps us to navigate these markets with clarity, confidence, and calmness. Now, I'm glad you're here to joining. I'm glad. Pardon me. I'm glad you're joining me as we head into next week. The headline is simple. The Dow Jones Industrial Average closed at another record high, extending its winning streak to 4 consecutive weeks. At the same time, the S&P 500 and the Nasdaq wrapped up their strongest quarterly performance since 2020. Now, on the surface, that sounds like a market firing on all cylinders. Now, but when we begin to dig into the charts, a different picture begins to emerge. Institutional money continues to rotate out of those high-flying AI and semiconductor names and into more traditional cyclical sectors. And we'll look at a couple of those where the money is flowing into the Dow Jones Industrial and the equal weight S&P 500, the Nasdaq Composite, and even the Russell 2000 continues making new highs, while technology leadership is clearly beginning to weaken, and a meaningful shift in market leadership is one of the most important things investors should be watching right now. Now, volatility remains remarkably subdued, and as we reiterate on each one of these broadcasts, the VIX is roughly right now at around 15, 16. And as long as it stays below that threshold of 20, which is the line in the sand, we begin to see more volatility than usually stock prices or the indices begin to fall. But we're nowhere near that right now as of this recording. We are at a complacent level. So uh, you should continue to see the market grind higher as long as the VIX stays below 20. Now, crude oil fell to its lowest level since March. We're going to take a look at that. Gold and silver continue to consolidate recent gains as investors balance safe haven demand against stable interest rate expectations, while Bitcoin records a 3-day bounce on increased volume. Now, from a macro perspective, investors continue to expect that the Fed will leave interest rates unchanged at the upcoming July meeting, allowing earnings, economic data, and institutional sector rotation to remain the primary drivers of market direction. Now, let's turn our attention to several stocks that continue to stand out on the technical chart. Um, we're going to take a look at Nordic American tankers continuing to show relative strength as the tanker sector benefits from improving shipping fundamentals. American Airlines, ticker symbol AAL, appears to be building a constructive base and continues to be setting up for a breakout if the travel demand remains strong. We're going to look at Regenix Bio. This is one of those sectors, which is the healthcare sector, where we're starting to see money flow, institutional money flow into the healthcare sector. Now, it remains one of the more interesting biotechnology setups, with technical traders watching closely for catalyst-driven momentum. Also, we're going to look at Butterfly. That's another healthcare product, also a healthcare and technology product that continues to impress after its recent breakout, attracting institutional accumulation and remaining one of the strongest healthcare technology charts. Also, we're going to look at Digital Turbine, ticker symbol APPS, continues strengthening after emerging from a lengthy base with improving relative strength and accumulation, suggesting institutions are becoming more active. We're going to look at one of our stable stocks here, Nokia, which has been in a pullback, shallow pullback, I would call it, and it remains technically constructive as global communication infrastructure spending continues supporting the longer term trend. And we're going to look at an old ticker symbol here from back in the day, BlackBerry has regained momentum as investors rotate back into the cybersecurity and embedded software companies. Now, in today's report, we'll break down each of the major market indexes, including the Dow, the S&P 500, and the NASDAQ, and the Russell 2000. We're going to look at VIX. We're going to look at crude oil. We're going to look at gold and silver. We're going to look at Bitcoin. Now, we'll review sector rotation and identify the stock showing the strongest probability of performing during the weeks ahead. And we've already taken a peek into that, but we're going to look at it on the charts to see how they fare. So, if you're looking to stay ahead of institutional money flow and identify where the next high probability opportunities may be developing, you are in the right place. And here at the Money Flow newsletter, we like to say price tells you what is happening, but volume tells you how strongly institutions believe in it. Every day, big money leaves a trail. The challenge for traders and investors is learning to recognize those footprints early. Now, this is prepared for client distribution. This is not investment advice. It is for educational and informational purposes only. So now let's go ahead and get into these charts. Now we're going to look at the indices, and here we have our 4 grid as we usually start off with. We look at the S&P 500, we look at the Dow Jones Industrial, and we look at the NASDAQ along with the Russell 2000 on our long-term weekly charts. So we're going to start with the S&P 500. We're going to maximize it. And as you can see, our signature background is still green, which indicates with a high probability that the trend is still intact. The long-term trend for the S&P 500 is still intact. This is our proprietary software, and what we like to see is on each one of these candles here are 1 week of time and trading time, and we see that we hit a new high here back in June, but we're just continuing to consolidate along that line. And as long as these price bars are above rising moving average, we have our 10-week moving average, which is our sort of our warning, and then we have our 40-week moving average, which is still rising, and that is the long-term indicator that keeps us invested as long as that background is green. And we've been green since May of 2025. So this has been a really elongated uptrend. Even though we had a little bit of a dip, the background did not turn pink like it did, or red here, where it shows a long-term bearish condition. Our condition is still bullish. And our confirming indicator here, the MACD, is positive. So that lets us know that there's a very high probability of this trend continuing. Now that is the S&P 500, and gave you the explanation. We'll just go through the Dow Jones Industrial, and we see a similar pattern. We hit a new high last week, and the Dow Jones Industrial is really showing positive strength. Along with our confirming indicator, we like to see that being positive, our MACD, and that lets us know that there's a high probability of this trend continuing. Now we're going to shift over to the NASDAQ, where it has been having a little bit of trouble. However, our background is still green, showing bullishness. Seemingly, this is a healthy pullback, and we know that tech usually bounces back from a pullback, and we'll be ready with our powder dry to scoop up some of those high quality names that have been pulling back. However, price bars still above rising moving averages, and our MACD is still positive, letting us know that the tech is not uh, trending down. However, it's just a shallow pullback. Now we're going to move on to the Russell. We see that we hit a new high there on last week. Same story, right? Green background, prices above rising moving averages lets us know that our long-term trend is intact. So there you have it for the indices. What's the bottom line? We're still in a strong bull market, and we're going to look at these quality names now that have been standing out and are ready to be purchased when the time is right. So we're going to switch over now to our other charts here. And that's going to give us a look into our indices. We already looked at the indices. So here is one of the charts that I wanted to display. This is the financial services sector chart. And this is where big money is starting to flow. Institutional money is starting to flow. And as you can see, we are above uh, uh, our channel here. This is the daily chart. We're going to move to the weekly chart. And as you can see, it has, for the long term, really been moving in the right direction. And then the next ETF I'd like to show you is XLV, which is the healthcare sector. And it has already printed at what we call a golden cross. It hit a new high, and that is where a lot of the rotation of in the money flow is going. We're going to look at our general sector. We're going to look at, as we said, we're going to look at Bitcoin, the VIX. See, the VIX is way below 20. It closed today at 1557. We're going to look at gold. Gold is still in somewhat of a short-term downtrend. I mean, it came from 5,600 all the way down to 4,100. Looks like there may be a bottoming pattern, but we'll wait, watch, and see. We're going to look at silver. It's telling its similar story, and we're going to look at oil. Oil has been in the downtrend from its high of 119. That was back when the Iranian conflict started in March, and it is continuing to show weakness at closing at $68.75 a barrel. You should see gas prices coming down because of that. And we did look at, okay, Bitcoin is in a funk, but it's showing, some a bounce here, but it's still nothing to write home about. So from there, we're going to look at Regenix, RGNX, and you can see it's breaking out and it's showing very good relative strength. We're going to look at NAT, N-A-T, that is Nordic Tankard, hit a new high, starting to show very good relative strength. We're going to look at even American Airlines, AAL, because jet fuel prices have come down. It has really taken off and it's looking good right now, even though it pulled back about 17 cents today. We're going to look at Butterfly, BFLI. This is one of our featured stocks, and it is really showing strength in spite of the market choppiness. And then we're going to look at one more, which is APPS. And it is showing so much strength